watching Stock Watch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Rowan Williams from Nitrogen Fund Managers and Mutooni from Sanlam Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Gents, welcome and thank you for joining us. I wanted to see if there was a question that I could ask about what's happening in the macro economy, but I don't know, like things seem boring at the moment. We know what's happening, even now with the non-farm payrolls, they came out and now we're just like, okay, well, the Fed might not cut interest rates. So let's actually just get straight to the questions. All right, starting off with Bytes. Of course, that was a big one yesterday. How much did it slide by? About 29%. And this is, of course, on everyone's mind. Even me yesterday, I was like, because before that dip, it wasn't even a dip, it was a plunge. Before that plunge yesterday, there'd been such strong sentiment on Bytes, and even the share price action was really just in line with the good fundamentals. And I was also thinking, should I actually just buy the dip? Because there's just been so much good news around the company until yesterday. I want to start off with you, Rowan. Is this a buying the dip opportunity?
Yeah, I mean, it was quite surprising the extent of the drawdown. I think the update was somewhat disappointing. And I guess a lot was baked into the share price, and you can tell that by the size of the dip. So they were at pains to say they're sort of transforming their sales approach, more segmented approach, customer-centric. And in the short term, that's sort of having an impact on earnings and sales. I think the bigger concern was the change in Microsoft incentive structures, which is where they earn most of their revenues from. So you need to understand those quite closely. But I think if you like the story for the long term, obviously it's certainly a lot cheaper than it was a few days ago, and it could be a very interesting entry point. There has been strong demand for Microsoft products. I think with the advent of AI and companies now integrating that into their workflows, into every aspect of their business, Microsoft has good offerings in the form of Copilot and obviously their cloud solutions. So it could be quite appealing. I think it's worth a close look and understanding in terms of the medium term. If it's a short-term sort of blip in earnings, certainly there'll be a recovery and the stock will recover, and it will, in hindsight, be a good entry point. So worth a close look.
I mean, you make an interesting point that there was so much good news priced and baked into the price. Roy, would you maybe say that it was an overreaction, which is interesting because usually when there is an overreaction, the markets quickly realize and you kind of start to see upward movement in the price. But there wasn't even any upward movement today. It was flat. And I'm wondering if it's just too much to expect for investors to kind of start trying to buy the stock at this point. Roy?
So the whole story around the Microsoft incentives has been known for some time, and it's unclear what exactly the impact has been. I think management was communicated that they knew there was an impact, but it wasn't as big as people expected, and they believed that they'll be able to ride it through. Now, the thing about Microsoft is they're very clear. They do need intermediaries like Bytes, but they rank the intermediaries based on size and influence. So there's some clients who Microsoft deals with directly. There's other clients they want their intermediaries to deal with. And then there's other clients who maybe will be third party or more extended. And I think, so from that perspective, I think what basically happened was management assured the market that it was all in control. I think the numbers, the way they panned out, it didn't seem that way. And even in their update, they did say they'll recover some of it in the second half. But the markets just defaulted to, no, we've seen this game before. We've seen other people suffer. We think you're going to struggle. But I mean, like Rowan, I like the business. They're a solid partner for Microsoft. They're nicely embedded in public sector and private sector in the UK. I actually did meet with their management the last time I was in the UK, and I saw the big thing which they're trying to do, which is build their sales force, their qualified sales force, to go out there and sell services. So they're not entirely dependent on Microsoft. They're selling services and embedding themselves within the client. So I think over the medium to longer term, I think there's definitely a story here. But like you say, over this short term, who knows?
Yeah, indeed. Well, talking about short term versus long term, there's Afrimat. And of course, we know that in the short term, it has not done very well. But I do know the confidence that a lot of investors do have in management. And of course, we can't ignore the fact that Afrimat is a cyclical company. The question goes, Afrimat is down year to date. Why is the stock so down? And if it's a good level to start buying? Rowan?
Yeah, I think the sell-off has been quite surprising. Obviously, the last set of results was pretty disappointing, a significant decline in earnings. I guess they're doing quite a lot at once, and so that's putting a bit of operational strain on the business, and that's at the time when iron ore prices are fairly weak as well, and they need to turn around the Lafarge cement business, so that's taking a little bit longer than anticipated. Some of the mines are not producing as expected. So I think that unfortunately the management team, which had until recently delivered against expectations and met or exceeded investor expectations, are disappointing now. And there's been a prolonged sell-off, and it's continuing. So I think at these levels, it's starting to look quite interesting. It's sort of down significantly from results. It's lagged other parts of the market as well, so it's screening quite relatively cheap. And I think management will do a good job of delivering, particularly on the turnaround on the cement operations, and that they got at a good price. And if we do see, and we do expect to see, an increase in infrastructure spending, they will be a direct beneficiary of that. I think the iron ore price has stabilized. I think it has potential to move up as sort of the tariffs impact on global growth is not as bad as initially anticipated. So you get that optionality as well. So at this sort of price below 45 Rand, it is starting to look interesting. And I think, possibly worth accumulating some here.
And I mean, noting what Rowan has said, that for a long time, Afrimat actually defied what was happening in the rest of the market. As much as I talk about cyclicality, I think it's only recently that it started to kind of go with the market. Is this also just testament to that, Roy, the macroeconomic environment will end up catching up with you, as great as management is? But then what do you do when the macroeconomic environment does finally catch up?
Look, that's the reality of the situation. I think it's a solid management team. The good thing about them is they're continuously talking. They'll always tell you when things are good and when things are bad, what they're struggling with, what they're working on, what's next. That's one good thing that's very clear. It's now incumbent on the investor to decide, how long do I want to be on this ride? When they're at the bottom of the cycle, they don't change. They've got a portfolio of assets, some of which are exposed to commodity prices that have come down significantly, the iron ore price. Others, like the Lafarge acquisition, are exposed to an industry that has excess capacity impacted by imports and no investment, and what they're trying to do is turn it around and find a place for it in the industry. So you as an investor have to decide, do I want to be in for this ride? Because it's going to take time for it to get out. What you do know is it's a management team that knows what they're doing. They're going to take care of the things that are in their control. And when the cycle does turn in a meaningful way for a majority of the assets, then you will be rewarded. But that's just time. There's really nothing else to it.
All right. Well, while we are still in the kind of commodity space, let's get into gold, a firm favorite, of course. But now we're drilling into Pan-African resources. So what's your view on Pan-African resources, given one, the recent share buyback program, and two, the upcoming trading results, which will be based on the elevated gold price instead of the old hedge? Surely there's big value in this stock. Rowan?
Yeah, look, gold has been an incredible performer. It has done, really well for the JSE in terms of pulling up the whole JSE. So, and I think in this uncertain environment, when you're investing in a gold mine, you obviously are getting exposure to gold as a commodity. So you need to consider that, I think, first and foremost. So you have to be a gold bull. And I think on top of that, generally the mines have been sort of operationally delivering. And I think Pan African Resources looks like it will as well. And obviously the cash flows are going to be incredibly strong, and you can see that in terms of them having confidence in their share price and buying back shares, which will also be earnings accretive. So it possibly does reflect value. Again, you just got to be confident that the gold price will stay at these levels, as the viewer points out, and the earnings are going to be elevated because of the gold price. So that's really what it comes down to. So I think there are good reasons that gold can stay high, partly because of the weak dollar and geopolitical uncertainty. So, but if there is, I think increasing certainty, which I don't know, we've dodged quite a few bullets in the geopolitical environment recently. And if things do continue to improve, gold could moderate from here. So you do have to be conscious of that with all gold share investments.
It's quite interesting, because they usually say hope is not an investment strategy. And of course, right now, when you're looking at these miners, you're really hoping that they will continue with the gains. But even as Rowan says, at some point it will moderate. But Roy, do you think that these gold miners could have some sort of re-rating that could kind of outlive the elevated gold price, or is it just about the gold price at this point?
There's a thing that we always forget when we talk about gold miners, which is called the all-in sustainable cost of operations. When these guys, when the price rallies, these guys dig up a whole lot more. Remember, these are deep level miners. They're getting, is it 4 grams per ton or something like that? So they dig up more, or they go to the place where they can get most ore, and their costs rise. I don't think you ever see a situation where the gold price rises and the cost holds the way you'd see it in an industrial company. So your big concern here is by how much does that cost rise, and does it compensate you sufficiently? Because at the end of the day, these are operational businesses. There are operational risks. The reefs are unpredictable. You never know what happens. If you have, God forbid, a fatality, the regulator will shut you down as the law demands, as they do the investigation, and you will lose days of production. So I think, yes, the gold price has lit a fire under all of these, and you'll probably see that result, but watch the trend line in that all-in sustaining cost. A lot of these guys tend to become a little bit irresponsible at that time, and also they engage in M&A. Pan-Africa, no different. They did try and buy something. And M&A is where things get complicated, because management take their eye off the ball, or they overpay, or things like that. I'm not saying that's what Pan-Af will do, because like Rowan says, they're buying back shares, they're paying a solid dividend, and they've tended to do the right things. But don't forget that dark side of mining.
Okay, definitely something to keep a close eye on. Right, gents, more questions. I wonder what thoughts your panel has on Octodec, which pays a good dividend but never moves out of a small band either up or down in the share price. And is there any point in holding on to City Lodge, which also at least pays a dividend but also doesn't seem to be progressing? I think the first question, what do you do in that instance, Roy, when a company is paying dividends but the share price doesn't seem to be going anywhere? Where do you attach the value of that stock, Roy?
It's you as an investor who needs to determine what you're looking for. So if the dividend, if you're a dividend earning investor, then life is fine. You're not losing on your capital. There's the potential of growth, and you're getting paid to wait. So that's one thing. I think a company like Octodec, it's small, it's illiquid, it's involved in property. So most of their revenue is indexed to inflation and long-term leases. So the revenue doesn't go up much. Their costs are indexed to inflation, and what they do is they pay out I don't know, these days they pay maybe 90% of bottom line earnings. So your dividend is going to be pretty consistent, and it's going to be indexed to where the bond yield is. So Octodec, small, a little bit liquid, it traded, I don't know, I think it's at a 10 or 11% dividend yield. I stand to be corrected. It's not going to change much, because not much changes with its underlying earnings, its underlying outlook. So I think you as an investor have to decide, does this fit in my portfolio where I want an income? If it does, then all's well and good. If you're looking for growth, you're better off looking for it somewhere else.
Yeah, and that's actually it. The liquidity, if you're going into a small cap, I guess that's really what you have to accept. Rowan, what are your thoughts on that?
Yeah, I'd echo what Roy said. I think what we are seeing is that the less liquid counters, the smaller counters, they are getting less interest, and the investment activity is concentrating on the bigger shares.
Yeah.
So that's what you have to take into account, and you have to be happy, I think, with your distributions that you get, as Roy said. So otherwise, you've got to look elsewhere for something a little bit more exciting in terms of where there'll be growing dividends. And I think that's where you have to think about operating businesses that provide a service, a product that the market wants, that will continue to grow and consume and grow market share or grow customers. And that's probably a bit more of an exciting investment, particularly if you're going to take a small cap investment. You might as well look for something where there's going to be some growth.
Well, let's drill into City Lodge, because the viewer is asking, is there any point holding on to City Lodge? As much as there's obviously this frustration on the share price really not moving over that R4 level, but would that frustration, Roy, filter through to the fundamentals or not?
Well, the fundamentals are basically that for these guys to see growth, you need occupancies to get to a certain level. Now, the market segment that they serve isn't growing. That's the mid-tier business traveler, primarily in Gauteng. That market isn't growing. Maybe you might say that in the next 12 months, the G20 summit is a massive success, and there's a whole need for occupation over and above the big 5-star hotels and everything, and they get a bit of overflow, and they succeed at that. Maybe you say that maybe they get a short-term flip, but in truth, what they need is economic growth, great activity, more people coming in from the rural areas to come to do business here and go back, stuff like that. That's really what the logic is. I don't think it's any more complicated.
What would your approach to City Lodge be at this point, Rowan? And I guess obviously just looking at the broader sector that it operates in, and its positioning and appetite for it.
Yeah, I think I would echo what Roy said, that they're more exposed to sort of general economic climate, a mixture of sort of maybe lower end leisure and business, and maybe to some extent government travel as well, or public sector travel more broadly. And I think what's been frustrating is that whole sector's taken longer to take off post-COVID than as anticipated. I think they obviously had a very difficult time. They did a capital raise, and they have sort of fixed the balance sheet, but the earnings aren't really growing. So that's been frustrating. I think what we're seeing is some of the other leisure groups like Sun International or Southern Sun actually have been growing earnings a lot faster, growing dividends, and look like a better proposition. They're getting maybe more exposure to the international traveller, which has been a growing sector, and that high-end traveller. So I think maybe it would be better to switch some of your City Lodge into one of those other counters that is benefiting, and there are some other aspects to it. So but otherwise you have to be patient. I think economic growth, unfortunately, is taking longer to take off as well. So you can understand the frustration reflected in the share price not going anywhere.
Well, as you're talking about patience, a lot of people have been very patient with Renergen, and I do think that a lot of people are disappointed, but actually some people are, especially because now they're being taken over by ASP Isotopes. Some people are saying, well, it's basically a bigger company, also exploration. There's a lot of hope that is going into that as well. But of course, they have a bigger wallet. Okay, firstly, the question goes, could you explain what Renergen's offer to shareholders is? If I remember correctly, Roy, it's not cash, it's an exchange of shares, isn't it?
It's a pure exchange of shares. It's all about the isotope guys getting a listing both here. I think they're already listed in the US. I think they're actually on a roadshow right now trying to explain the situation to investors.
Yeah. And I mean, as I mentioned, people on the one side of the fence are saying, Rowan, that you're just investing into another company that's kind of an exploration company. And some people are actually saying, well, because also they have this bigger wallet, then maybe things are better considering also the financial situation that Renergen was in. Where are you on the fence there?
Look, certainly in terms of the ability for Renergen to continue with their helium projects, this is very positive because I think they're going to get access to a much broader capital market, and maybe they tapped out sort of the local markets. The NASDAQ is a much broader, deeper market. If you look at just the ASP isotope share price and the US markets and how much it trades on a daily basis, it's vast multiples of Renergen locally. So that is quite positive. I think they needed to do something, and this is a positive thing in terms of continuing to access capital. These types of projects are incredibly risky, as you've seen. Significant sort of drawbacks and delays, everything taking longer than anticipated and probably needing more capital as well. So in terms of the riskiness of the project, I think the financial risk is removed or reduced significantly, but the operational risk doesn't change that much. So you still have to assess it from that perspective, and will they ultimately make a success of it? But I think for those shareholders that are in it, it's very positive. But, will it ultimately succeed? We'll have to wait and see.
All right. I was going to ask you about Telkom, but we are out of time, and I'm glad that, Roy, I don't have to ask you about Telkom, but be sure to watch. We will definitely be talking about Telkom on the next episode of Dragon Ball Z, which is tomorrow. Stock watch tomorrow, not Dragon Ball Z. Roy, your stock pick for today.
My stock pick for today is Motus. I mean, when I was looking at the vehicle sales, which came out a day or so ago, one of the narratives that comes out is that the Chinese are here and the Chinese are killing everyone. But I think when you look through those numbers, you see the big Motus brands between Hyundai, Kia, and Renault. They've actually grown by about 25%. So basically, Motus is fighting back and has a really strong place in the market. They've also got a few of these Chinese dealerships, so they're not being edged out. And on the other side, where we are growing aggressively, they've also got their strategy to used market. I think basically run the business. They're not just dealerships. They've got car rental, they've got the international business, and they've got aftermarket parts as well. And over the next 12 to 18 months, you'll see them deleveraging, and they've always paid quite a solid dividend as well. So I think at this valuation level, there's definitely upside for that stock.
Okay. Rowan, where are you seeing opportunity today?
We're going with fintech play Capital Appreciation. They recently came out with their results. Very strong showing from the payments division. Very strong execution, increasing what they call their estate of terminals in the market, building their annuity revenue. Also very exciting developments with the Halo software payments solution. And so growing market share significantly there. The software business, a little bit disappointing, but from our perspective, that provides upside. So what you're getting is quite a cheap entry point, sub 10p historic dividend, strong dividend. It's cum dividend as well, and it's one of the few sort of more pure fintech plays out there. And they're talking about also incorporating AI into their product offering. So I think it's got room for sort of multiple growth. They are going to change the name, I think, to reflect what they do. And I think, yeah, it's still got a lot of legs from here.
All right. Well, gents, I really appreciate your analysis today. Thank you so much. That is all for Stockwatch tonight. Thanks to our guests, Rowan Williams from Nitrogen Fund Managers and Roy Mutooni from Sanlam Investments. Up next, The Close. Stay watching.